Is it possible that we could enter into a recession in 2020, but the market may not care about it? The stock market might not care about it. On a conference call with some clients earlier this week, the question was asked, if second quarter economic data comes in just horribly negative, is it possible that the market could actually go up? The answer to that question is yes. And here's why. The economy and the market are not the same things. A lot of people talk about them synonymously, but they are not. A lot of people also use the words recession and bear market synonymously, as though they are tied to the same things. They are not. The word recession describes the economy. The word bear market describes the stock market. A recession is defined as 2 consecutive quarters of negative economic growth. The economy measures our total economic output. You hear this described as our GDP, gross domestic product. What happens, though, in a situation like we have right now, where businesses have had to close down, trade has basically come to a standstill globally, as you know, certainly here in the United States. Well, you can't have that happen and have economic growth. In fact, you're going to have significant economic contraction in the second quarter, April through June, which we're in right now. But we won't know that number for a while, right? We have to go through the second quarter before we can have second quarter economic growth or decline. But let's just say, for the sake of argument, we're going to be in a recession for 2020. We're going to see a recession. The market may not care about it. Why? Because the economy is backward looking, the market is forward looking. The economic data is reporting on what's already happened. But when you look at the stock market and what direction is it going, it's because we as people invest in the stock market. We're not necessarily concerned about what's already happened. We're concerned about what's going to happen in the future. That's how people invest. They invest based on what they think is going to happen. Right now, negative economic growth is a certainty. However, we could absolutely see the market continue to go up because people have faith and hope that the number of new coronavirus cases is going down, that the number of deaths is starting to decline. And as the hope builds that we're going to get on top of this thing, you can actually see the market start to go up into the second and third quarter, even as we might be in the midst of a recession. So it's very important to understand there is a difference between the economy and the market. They are not the same things. We do not track them the same way. And if you keep that in mind, then you'll be able to segment out the bad headlines that I promise you you're going to hear about the economy April through June and going into the third quarter when we finally get the economic data. So don't make your decisions based on just economic data or just based on the market. You have to understand how all of these things work together. If you've got any more questions, give us a call here at 405-348-0909. The advisors here at ChappelWood are here to help you get through this. Thanks so much for watching. We'll see you next time.